Use the 6 digits code that will be provided in the course of this video to verify your task.
Hey everyone, today I'm going to take you through a simple guide on how to read a cryptocurrency chart. Now, I know that these charts can look intimidating, all those lines and colors, prices going up and down, and weird terms like candles and wicks. But I promise, once you get the hang of it, it's not as complicated as it seems. Let's break it down into bite-sized pieces. A cryptocurrency chart is basically a visual representation of a coin's price movements over time. Think of it like a heart monitor, but instead of tracking heartbeats, it's tracking the highs and lows of a cryptocurrency's price. You'll see a timeline on the bottom. That's the date and time, and a price scale on the side, showing how much the coin was worth at different points.
6-5.
The first thing you need to look at is the time frame, which tells you the period that the chart is showing. It could be a minute, an hour, a day, a week, or even longer. If you're interested in short-term trends, you might want to look at the 5-minute or 1-hour charts. If you're in it for the long haul, a daily or weekly chart gives you a clearer picture of long-term movements. This is where a lot of people get confused, but I promise it's pretty simple. Most cryptocurrency charts use what's called candlesticks to show price changes. Each candle shows how the price of a coin has moved within a set time frame, like 1 day, 1 hour, or 1 minute. Candlesticks have a rectangular body with lines or wicks sticking out of the top or bottom. When you see a green candle, it means the price went up during that period. If it's red, it means the price went down. The top of the green candle shows the highest price it reached, and the bottom shows the lowest price. The wick on top shows the highest point the price touched, and the one on the bottom shows the lowest point. Think of it like how far the price stretched up and down before settling. Step 3. Identifying trends. Now let's talk trends. When you look at a crypto chart, you'll often see lines going up or down in a pattern. If you notice a series of higher highs and higher lows, that's called an uptrend. It usually means demand is high and people are buying more, so the price keeps rising. If you see lower highs and lower lows, that's a downtrend. It's like the coin's losing energy. People are selling, so the price is going down. Sometimes, though, the price moves sideways, not really up or down, which we call a consolidation phase. It's like the market is taking a breather before deciding on its next move. Step 4. Using moving averages. One more handy tool you might see on charts is something called a moving average. This is just a line that smooths out price data over a certain time period. A popular one is the 50-day moving average, which shows the average price over the past 50 days. If the price is above this line, it usually means the coin is in an uptrend. Below it, it could signal a downtrend.
3-4-3.
Moving averages help give you an idea of where the price might be headed. Step 5. Be cautious of emotions and hype. And finally, a tip that goes beyond the charts. Don't let emotions drive your decisions. Cryptocurrency is highly volatile. Prices can swing dramatically in a single day or even hour. Just because the chart shows a big green candle doesn't mean it will keep going up, and a red one doesn't guarantee a crash. Be cautious of hype and take your time to understand the trends, not just the price moves. So that's the basics of reading a cryptocurrency chart. Now it takes some practice to get used to, but once you start recognizing trends and understanding what each part means, you'll feel a lot more comfortable. Just remember, look at the time frame, understand the candlesticks, spot trends, and use moving averages. Happy trading, and remember to stay informed, because in the world of crypto, knowledge is power. Thanks for listening, and I hope this makes crypto charts a little less scary for you.
4.